For today's Targets in Focus, I am joined by Tom Levinson, Senior FX Strategist at ING in London. Thank you for joining me, Tom. First of all, let's look at the Australian dollar against the Swiss franc. How is this currency pair performing today, and what are your predictions?
Well, it's pretty flat, to be honest. Of course, on one side of the equation, you've got the Swiss franc, which is limited in terms of its movement against the euro, with that 120 in place, that floor. For us, and looking ahead, we do see significant downside risks for the Australian dollar, particularly because the RBA in Australia has put in place a pretty aggressive interest rate easing cycle. We had another interest rate cut earlier this week, and I think there's more to come, perhaps another 50 to 75 basis points this year. So although the Aussie-Swiss franc crosses fairly flat at the moment, we do expect it to trend lower over the next few months and then over a 12-month horizon.
The euro hit a 10-day high yesterday against the US dollar during trading, following a positive Spanish bond auction, which caused an increase in risk-taking. What are your thoughts on this, and what type of future events could affect this pair?
Well, it's performed a little bit better this week, euro-dollar. It's been a slightly more positive risk environment generally, but we do expect the gains that we've seen in euro-dollar this week to be rather short-lived, and indeed we have a rather bearish forecast for euro-dollar over the next 6 to 12 months. For year-end, we're forecasting 115 on euro-dollar. That's just about the most bearish forecast out there in the consensus. And looking ahead, particularly at the calendar over the next few weeks, there's a huge number of event risks out there for the euro, and we would expect most of them to play out to the negative side for euro-dollar. In particular, the Greek election next weekend, there's a huge amount of uncertainty over the result of that, and it's effectively being called a referendum on Greece's future participation in the euro. The outcome of that is unclear, and we think that will probably weigh on the euro over the next few weeks. Beyond that, looking towards the end of this month, there's another huge event in the form of a European Union summit. That's on the 28th of June, and there the pressure will be on European leaders to come up with some sort of plan to help Greece and also perhaps help the Spanish banking sector. And if we look to the past, we tend to get disappointment from these summits, and I think that would be our base case scenario again for this summit coming at the end of this month. So all in all, we would be suggesting to sell into any rallies in euro-dollar, and we do target a move back below 120 before too long.
And finally, the euro-pound was flat below 0.81 levels as risk-off trade is prevailing in the market so far today. What is your opinion on this, and how do you see this pair performing over the next few months?
Euro-sterling's been something of a mixed bag of late. Euro-sterling has been trading lower over the last 2 or 3 months, but we have had a rise back in euro-sterling back above 80 cents over the last week or so. In general terms, we are positive on sterling. We're negative on euro-sterling. That's both because we think that sterling can perform quite strongly for its own reasons, but also because as a house we are generally negative on the euro. So in terms of our forecasts, we're forecasting euro-sterling to fall quite sharply down to around the 75 level by the end of this year. More immediately, we're forecasting 78 cents for euro-sterling on a 1-month horizon. Looking more into the reasons, well, on the downside situation for sterling, the risk would be that the Bank of England launches further quantitative easing when it meets at the beginning of July. That would be a negative for sterling, but offsetting that we think is a far more serious situation in the eurozone, which should weigh on the euro. And in particular, we take the view that if you're looking for safety and liquidity, which I think is of paramount importance at the moment in the market, sterling offers both safety in terms of its AAA sovereign rating and also liquidity in terms of a deep liquid currency, which is perhaps a sensible alternative to the euro. So all in all, we think this adds up to a negative euro-sterling situation, and we think it can trade back below 80 before too long.
Thank you, Tom, for sharing some of your latest forecasts. Stay tuned to Dukascopy TV for more exclusive interviews and press reviews. Goodbye for now.